The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, once more into the breach, dear friends. And of course, every day between 2 and 3, when there's trading, there's me and this show.
The following takes place between 2 p.m. and 3 p.m.
Every day. As we get ready to start the day off, we take a quick look at the S&Ps. We're off 9 points. It's no big deal. Volume is extremely tepid at just over 2 billion shares, but not a big surprise. We've got the Fed coming in. We've got earnings coming in. The Fed announcement, of course, will be Wednesday at 2. There is no press event, according to their website. But, you know, she always talks too much anyway. So probably better off that will be one announcement and done and go on with it. Of course, we've got some earnings. We'll talk about that. And as we talked last Wednesday, and many people said in the den, or at least one person said in the den, earnings and PEs just don't matter anymore. Earnings per share, it just doesn't matter anymore. And the answer is that many times it does not matter until it matters. And of course, there are a great deal of value investors in this market. They start seeing PEs push 20 on regular stocks, and they know that yeah, can you buy high and maybe sell a little higher? But a little bit of Russian roulette in that, and the greater fool theory at work. We saw what happened, of course, into Thursday and Friday with the tech earnings. But we will continue to look at those. But off 9 points, not a big deal. Like I said, 2 billion shares, volume is light. My guess is we're going to see light volume all the way into that Wednesday announcement from the Fed, in which case we'll go right back to waiting for more earnings as we come off. And of course, we need to get the party started just a little bit here.
That it's all just a little bit of history repeating.
And on this day, went too forward. In 1961, the first patent for an integrated circuit is awarded to Fairchild Semiconductors. Robert Noyce, who later co-founds Intel Corporation with Gordon Moore, who worked for him at Fairchild. And of course, if you listen to technology at all, you will eventually run across something they call Moore's Law. And of course, Moore's Law basically said that the circuits will double every year. It is actually 18 months, or drop in price in half in 18 months, or probably do actually both. And they've done that since about when he talked about it in 1965. If you plot it, it's a little bumpy, but not as bumpy as you might think with recessions and putting money to work. They've pretty much continued the incessant march to what we have now, which is some chips with 10 nanometers between the transistors. To give you an idea, that's about 1/1000th nanometers, about 1/1000th the width of a human hair. So we're basically talking about atoms. In fact, if you took a bunch of hydrogen atoms and put them between the traces that are now in these chips at 10 nanometers, you're basically talking about a handful. And when a handful, I mean maybe 10 or 15 atoms between all these things going on these chips. And of course, that has pushed them to start looking for many other ways of building smaller, tighter, and more energy efficient chips. And much like the big cities. They decided to start going higher with the high rises instead of just building out sideways. They've always had a certain amount of layers, but especially in memory and now in processors, they are going gangbusters. We may have had 8 and 10-story high rises in these chips in the past, but they are looking at hundreds of layers now to try to get what they need in and get the traces absolutely at a minimum. Even at what is close to the speed of light, going from one side of a chip to the other side of the chip now is even problematic at the speeds that they're running, and continues. But on this day in 1961, the ship sailed and continued on. Of course, we've got a little bit of people nipping at our heels. And of course, we had something that's uncommon.
You're mocking me, aren't you?
Well, I wasn't mocking you, but one of the CEOs from a electric car company certainly is, and he was basically mocking Apple, which is very rare for the personalities in in China to actually do it. But he said, speaking at a meeting of a Chinese entrepreneurial club that CNBC was at, he explained why foreign rivals did not worry him, and particularly in Apple, who are also expanding its ecosystem, mostly because he said Apple only has individual apps. This is the right choice during the first generation of mobile networks, but when CPUs and the mobile networking speeds were not fast enough, how now we're moving to the next era of mobile internet, these problems no longer exist. Moreover, having separate apps just means great obstacles in the user experience. We hope to break down these obstacles. But he went on to talk some smack, much like you find in baseball and I'm going to say basketball and football. I haven't heard a lot of smack talking in baseball lately. And hockey, they just actually smack people. So well, it's a little different, but very interesting to see maybe Chinese acting a little bit more like Americans, talking a great deal of smack. I'm not sure that Apple has gotten to the point where they think that they have to worry about this company at all. But the debate going on about the way software, especially for smartphones, has been written is been continuing down this path. In technology, they actually call it the atomization of apps, where every little app just does the absolute tiniest amount it can do, so you can get different apps that do different things, because no one wants one big app that does everything, but also because if you've got a lot of options, it becomes quite problematic with swiping and putting things in, setting up menus and changing stuff. But I think that as long as we're still using our thumbs, probably not a big issue to have atomization in apps. It's worked for both Android and Apple, and they continue to kind of do this. Some people have tried bigger apps, but they haven't been very successful. We will be back in a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, it's kind of be an interesting day out here. Of course, after the bell, we've got the Container Store. I'm going to call it, to this point, kind of a failed IPO. Did nothing but really go down. We'll see whether or not this thing has found a floor. Other things of interest, of course, is Ethan Allen. That'll give us a little read on housing sales as people start buying a lot of furniture when they buy new houses. Neighbor Industries. NXPI, of course, is the company that makes the let's call it, I guess, the Apple Pay chip. Well, I guess we can call it that goes in the iPhone. So we're going to find out how those guys are doing, NXPI. That'll give us a little head start into what we are seeing in Apple in the next day or so. Sanmina, of course, also coming out after the bell. When we look at the rest of the stuff out here, before the bell in the morning, we've got Beeve Aerospace. Will give us a little heads up on how maybe we can look at Boeing. Coach will tell us a little bit about retail sales. Corning, of course, it's Gorilla Glass will again give us a little bit of a read into the smartphone business, but not as much as NXPI. Eli Lilly, Hershey Company, will tell us all about chocolate. Lexmark, man, that thing has been on a tear. We may look at that yet today. Lockheed Martin after the bell. Marine Max for people down here in Tampa will tell us about boat sales and probably give us a little bit of a view into how everything else is going in the recreational market. First read on airlines with Spirit Airlines. T-Mobile, give us a little idea about how things are going on in the mobile market. T. Rowe Price for broker-dealers. Waters Corp, of course, makes a lot of water products for building houses, so that'll give us a little bit of a view into new housing. And Wyndham Worldwide before the bell. After the bell tomorrow night, we get into insurance with Aflac, of course, Apple, Barracuda Networks, which has been pounding sand for a while. Boston Properties, Buffalo Wild Wings, and on a Tuesday. So I will be able to go there for my half-price wing night. Capital One Financial Corp, Chipotle. That stock may have a nice bounce in it just because I think there's too many people short in it, or could. All they have to do is not really have a horrible earnings. Cree, of course, LED lighting company, iRobot, Twitter, probably going to be a very interesting Twitter earnings report after the bell. United States Steel, because, of course, we're bigger than U.S. Steel, Michael. And what else can you say? I got to sneeze. And we're back from sneezing. United States Steel, of course, Wynn Resorts Limited. And that's pretty much it. We're going to get into some of the stocks that I've been waiting to see how they do, at least the big movers for today. So we're going to get into those and see. Of course, AMD popped fairly nicely. It's pulled back today. This is where a lot of people that continue to have shorts much higher think that, of course, that these things are going to go out of business and they will be able to buy this back for a quarter. What happened with AMD, we kind of covered it last week, was that sales of their graphics processors have been a little bit better. They've also kind of made a deal with the devil in China to give them a lot of technology to let them continue on. And this is probably one of these times where if there wasn't restraint of trade and monopoly powers, that you would have seen somebody like NVIDIA or Intel or anybody come by and buy these guys rather than just give away the goods to the store to Chinese manufacturers for video cards. Of course, video cards have continued to sell well. High-end PCs continue to sell at least as good as they have in the last couple of years. And that's why these guys weren't back down to the 181, 175 levels that we've seen fairly in the recent past. But one good day of going into a weekend. And again, what you have to look at in a lot of these movements is an exhaustion move. We've talked about this several times. I like to see volume maybe 150%, maybe 250%. But when you get volume and huge moves like this, it almost always ends up with a move to the end. And, of course, going into a weekend, how many people want to think about this thing going to $5 if they are short? So generally, you get a move like that on Thursday after the close, it's probably fairly wise to go ahead and cover your short cover your long if you were long something like this. There wasn't a lot of heads up or any kind of articles about it, and the earnings call I did read over the weekend wasn't that great. It just wasn't that bad, and everybody and their dog was betting on this company going out of business. AVXL, little pop in this guy. It's just getting back up to this gap down that happened on the 29th of December. And that was about 6.5 million shares. You've got about that today. And I don't know if you can say a lot more about that. BBL, BH Hilton, a little tick down. Not a lot of volume, but certainly back into and filling this gap from the 19th of April. Just a few days ago. You know, you've got a three-gap play. You can make a case for a three-gap play on this. You've got three fairly significant gaps, especially for the trading on these dollar gaps. I would not be surprised to see BHP fill all of these as we continue on. Deutsche Bank down a little bit today. Volume is picked up, but a lot of these had little gaps from before earnings really turned on Wednesday and came up. Didn't have a lot of juice in the top. This one's got two gaps. I would like to see this actually get into these double gaps that go back to, what is it, the 15th of March and the 16th of March. And if this thing could gap up one more time, you'd have maybe a fairly decent play out there for a 3-gap play on that one. Some of these are just trying to get back to zero. A nice, huge, destructive gap down on 11 Biotherapeutics, EBIO. It's kind of a penny stock, but kind of interesting to see it come up and fill that. There were some rather bogus and self-serving upgrades this morning.
You're telling me a big fat lie.
I thought they were when I heard those upgrades. So we'll talk about Joy Global. We'll talk about Caterpillar and why these charts look bad. And a kind of, I informed you thusly.
I informed you thusly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Of course, numerous upgrades, dubious upgrades from Joy Global and Caterpillar this morning. Didn't do them any good. They are down on lighter volume, but when, we're only got a 9-point move out here and 12-point move at the max on the S&P cash. And everybody's just hoping that, we get through these first quarter earnings Just to say that it was a mulligan and we're going to go on. Everybody, of course, thinks that markets only go to the sky, and it doesn't matter how many times that happens. But of course, we've got a Fed that as soon as this market heads higher, they let off the accelerator of gas to the dollar forex markets. And of course, as soon as we tick down a few points in the S&P, they're back on the accelerator. And we're pretty much seeing just the opposite for the last week or 10 days. That is, any weakness in the market gets more cash from the Treasury, and any push higher gets a little bit off that. They take the foot off the gas. Anyway, Joy Global down, not a lot of volume yet. I think it's more of an issue of how hard that they were pounding the table this morning pre-market to what actually transpired. And of course, they pushed, CAT up to the high. What was it? $78.86. And of course, it instantly started selling off this morning, 76.53. This one, you had the bigger volume. They tried to save this on Friday. They had everybody out on financial infotainment telling everybody why they should be buying Caterpillar. For me, it was confirming something, and that was finally a bust down out of this move higher that started back in the middle of February. You've got a couple of things that you could probably look at, but I'm thinking maybe just a move back to either the 382 would take you to $73.10. And that is if it's nothing more than a pullback. You've got a confirmation of a double repo, and, volume came in on Friday. Not so much today, but continues on. What else do we have? KKR. This one kind of gapped down. And as we said, this is the kind of pattern where we've got out here a lot of days above a 9-day moving average. Some of these actually dipped below it. You went back higher. Did you have any volume? No. Like on KKR, you were about 400,000 or 500,000 shares short on Thursday and Friday. You gapped down today. Not a lot of volume so far. This still has to close back below a 9-day moving average to get your confirmation, but a lot of these stocks are slowly starting to roll over. PHG, which is this Swedish company, this is kind of how they are working right now. And I wish there was a better signal. Normally you get one kind of day out here, and it may just be because these stocks have been so far above a trending parabolic move for so long that, it basically, as soon as you have anything that looks like a break, it does break down. PHD is down significantly to its previous April 7th low, which was $26.69 with 1.5 million shares. You already have 1.9 million shares. If you're unfamiliar with this company, what else is it's a healthcare, consumer lifestyle, and lighting business. Although it says it's worldwide, it's really kind of a European company for the most part. And I don't know what else you can say about that. PRGO dropped the chalupa. I'm going to give it the loser horn for the day. And man, you didn't like these stocks just hanging out here without anybody buying them. I didn't see the headline on this, but I will look it up for the big one. But $100 is the only thing, maybe a little bit of sand underneath it. But this was the the CEO left. And I don't know what else you can say. Paulson takes a hit. But what's on this? Take a quick look. Joseph Papa, the new chairman and executive, said last week, but one hedge fund is, of course, getting Paulson's and Company top 10 holder of Perigo. And he had a bad hair day today with Perigo. RFP, another company moving here, down. And again, Resolute Forest Products, not a good day for this one. Volume is not very big. This thing has been basically in a trend line above since the 26th of February, kind of hugging that line. Never really had a lot of volume when it pierced it. Kind of did its parabolic move last week, going into last week, and last few days of last week actually started coming down. Not a high volume stock, so I'm not going to get too excited about it, but fairly extensively. Here's what you don't want to see, and that is a close below the 9-day on Rio Tinto. Not a lot of volume yet, and actually you've got 3 big gaps out here. This thing could pull back all the way and fill all these gaps to the 27 level, so watch out. SRPT, this is a little bit of a reaction from the reaction on Friday, down significantly on Friday. And of course, everybody was shorting this thing on Friday, which I thought was fairly hysterical after it got creamed. And of course, they pop it just the other way today and ran a lot more of the shorts. So this is one of the reasons why I don't chase stocks on the downside and two, we talked about big moves and heavy volume. You get all that volume in, a lot of times it is the exhaustion move, and you can get a pop like this right back. TPub, no, not a wrapper, but Tribune Publishing, a huge buyout offer out here, and one of the reasons why I do not short stocks that are $7 or $8, because it's easy to lose half in a heartbeat, and certainly that's what's happened today for Tribune Publishing. Vail, of course, also breaking through that level. In fact, you got the confirmation actually on Friday when this closed under the 9-day, and of course today down a little volume. I would not be surprised to see the market and a lot of these stocks maybe get a bounce or two, maybe into the Fed, into light volume, back up to this 9-day. You've got a very beautiful looking confluence level, and if you were looking to buy these things, you'd probably want to come back down to this level, which is about $4.70. We're going to the break. Give me a call at 877-927-6648. Email me at path@tfnn.com, and of course, put a message in the den. We'll look for it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And what else is happening? Anyway, we looked at Vail here. You got a nice confluence level at 452 to 468. That's not too bad, about 16 cents. You've got a gap at that same level. You've got a previous high with 86 million shares. If you were looking for a pullback on some of these, could be kind of interesting. But that's kind of where I think the line in the sand would be in many of these. And what else do we have out here? Xerox. I think, can we give two losing horns in the same day? I don't know. I will give it anyway. Again, this is, it seems like how these stocks are breaking, and that is they've been going up forever. In this case, since the 17th of February, this thing has done nothing but try to continue up. Had about 4 days last week that went sideways, and of course into news today, took and dropped the Baby Ruth in the punch bowl. I don't know if there's a whole lot more you can say about this other than back to $8.53, and no soup for them today. We'll go into some other stocks. What else do we have? We got some tests. We'll take a look at that. I wanted to see how some of these were doing. In fact, Borg Warner, a big transmission manufacturer, and other equipment parts, had kind of a nice little move back up here. It hadn't had a lot of volume. Looks like a doji out here for today. So I'm going to continue keeping an eye on that. You've got a couple of steps lower, not bad, 36 and then 34. But still not a bad, probably short out here if this continues to look weak. BZH, these again, looking forward to earnings the next couple of days on a few of these stocks that could probably give us a heads up. Everybody's been talking this sector up a great deal. Doesn't seem to have put a lot of juice into it. And the housing numbers that were out this morning weren't all that bad, but they're not making me think that we're going back up to the lofty levels of just even a few months ago. Cabot Corporation, you've got a lot of these. Let's see. We got a lot of these that could at any second fail, like some of the ones we showed you before. Let's give it the profile for you here on this. And that is, where are we at here? Specialty Chemicals and Performance Materials Company offers carbon black for rubber and tires and hoses and belts and all kinds of stuff. But that's it, Cabot Company. And, no volume out here today, sideways move. Again, any of these give a tick back below, and you're probably going to be looking for confluence levels and 618 and 50% and 382 retracement levels for these. Data, and we're not talking about the El Robot O out here. Tableau software that blew up during the last earnings is up here. I think actually they've coming up on earnings yet again, aren't they? May 5th, yeah. So kind of interesting to see this one. Of course, it blew apart. It's tried to get back up into this gap. It's been kind of tough. Got down to 36.30 on that February 9th low. Is drifted back up to the $50 level. There hasn't been a lot of energy to it. And in May 5th, so what do we got here? 10 actual days, probably what, 7 trading days, 6 trading days for that. So we'll keep an eye on it. EWC, another one of these stocks that any kind of, or ETFs, that any kind of weakness would suggest a failure out here. A little bit more volume out here in the Canadian index funds, and not a whole lot of difference than the rest of us. International paper, this is, of course, one to really look at. And the reason why, of course, I got an itch. Itch. The reason why, of course, is this is about what the entire market looks like, and that is these moves that are fairly ballistic. This already pulled back down below the 9-day. It's gone back up. Now, if it fails back up in here, would suggest a fairly decent move. Now, why I probably wouldn't be shorting international paper for any good reason, number one, is it just doesn't move that fast. It does tell us, and weakness in that tells us a great deal, because, of course, when you're packaging lots of products here in the United States and selling them, you need to go at international paper for the cardboard and everything else. Any of these paper companies generally are a good barometer, the canary in the coal mine for this. And when are they coming out for earnings? Let's take a quick look on earnings date. And April 27th. So we're talking Wednesday. What do we had? Let's take a quick look. Where's my international paper? Come on. Okay, before the market on Wednesday. So keep an eye on that. But again, these things are pretty much priced for perfection, and it continues to be problematic. One of the reasons why I thought Caterpillar had hit the highs, of course, was Ingersoll Rand. This thing had pushed back up. It's another one that could just at any second close below the 9-day and give you confirmation that it's set up. There's a nice little gap out here at about $58. That's also the 382 retracement, and where you could see how this is doing. How do you think Facebook will do on Wednesday? Will they blow it out and surge higher? You know, a notoriously quiet company, I think they could go sideways. I think earnings will be okay, but I don't think they'll blow it out. And this thing probably looks like, for the most part, it wants to hang around $110. I looked at options, and we'll look at them tomorrow before earnings, but I didn't see a great deal out here that says anything other than, unless there is some kind of major surprise that they have not warned us or anybody's talked about, maybe they could look at growing expenses. And that is one problem that Facebook has had over the last couple of earnings. You have to say that this thing has pretty much got into its February 2nd high that had 59 million shares with 33 million shares on March 30th. So it's tested its high. The chart actually looks fairly horrific. That is that February 2nd high to the February 9th low had monster energy, actually twice the amount of energy from that high to the low as the February 9th low back up to this March 30th high. So the chart looks horrible. That being said, it is going to, unless the expenses are very high, I don't know if there's a lot of downside in this stock. This looks like maybe one of the safety stocks that people are looking at in technology. we'll look at the options tomorrow. I certainly am not looking any higher. I just don't see a lot out here that tells me a great deal lower. We'll be back with the last segment. Give me a call, 877-927-6648. Post a message in the den or email me at path@tfnn.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We got a couple of stocks starting to give some signals at the high. Medtronic wanted to see, some decent energy in this today. December 17th had 11 million shares at 78.92. And today 4.4 million shares. So it looks like if we come in at 65% of that previous high, that will probably be fairly interesting. You need to see this thing close above 78.92, or you will have a dedicated sell signal. Energy, okay. This last leg out here in the last, since the end of March, just didn't have really anything to write home about. This seems rather half-hearted and kind of interesting. We've got some emails out here. Wanted to look at Microsoft. Do I think that there's anything else in this? And the answer is no. Other than this thing's probably in a bigger trading range down to 48.19. As we said last Wednesday before earnings, it's probably about as good as this thing gets. I wouldn't be short it or long it until this thing calms down, but it looks to me like 49.10 48.19, the previous lows out here, certainly are open, especially if the market pulls back at all. My guess is you've got an 80% chance of those getting tested rather sooner rather than later. What else did we have out here? A couple more emails, if I got enough time to get to all of them. Guess one of the things I wanted to talk about today was the weighting of the S&P 500. And one of the things, a lot of people ask me what I look at because I don't spend a lot of time on the indexes. But normally when I'm looking at the indexes, I look at the RIDEX equal weight ETF as a better picture of the S&P than anything else. Pretty big signal out here on this over the last few days, and that is the test of two previous highs, the November 3rd high and, of course, the December 1st high of last year. 2.1 or even 2.9. Let's just say 2.1 will be generous for that November 3rd high. You got into it with a doji on April 20th and with the 740,000 shares. So it's been rather quiet. The energy was about 20% lighter on the way back up. And that was with a lot of short squeezes out here. But I kind of like this equal weight ETF that maybe isn't as skewed to it. It's not as bad as the NASDAQ, but I certainly do like it better than just the unweighted or the heavily weighted S&P itself. What else out here? Sunoco, SUN.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.